What's up, everybody? We are live. Hope you're doing well. Today is the exam breakdown, and in today's exam breakdown, what I would like to do is I'd like to go ahead and check out some NMLS content for the nationwide mortgage licensing examination. There'll be some some simple relevance possibly to the real estate exam, brokers and salespersons. Not so much today. Today is primarily we're focusing on the mortgage originator's examination. Hope you're doing well. I'm D. Kumar. It is a pleasure to be here with you. I love the optimism. We've been getting a lot of great feedback about the last time we just went live. Doing this again, I have a lot of fun. It's a lot of fun to teach, and it's great to see you. Today's format, what we're going to be doing is we're going to be doing a couple of different sort of methods and approaches, things that have worked well for our students in the past. Number one, we're going to go over sort of an overview of what this is, the FCRA. It's in the legislation piece of the examination outlines. So if you go to the NMLS, Nationwide Mortgage Licensing System, and you go to the their examination outline, you'll see it under the federal law section. And we need to know a little bit about it. Now, on the mortgage examination, there's a fair amount of different content that you do need to know. And in some instances, we have to go fairly deep into these bits of legislation. So what we're going to do is we're going to go into these. I'm just going to make some adjustments here. Excuse me. So we're going to go into this, and then we're going to go and start working through. We'll talk about some concepts. We'll look at a few notes. We'll make some points on what the FCRA is. And then we're going to go into some vocab, some flashcard style, and I'll sort of detail a couple of things that I think are relevant potentially that you might see on the examination. And then we'll end with some quiz questions. And then if everything goes to plan, we should be about maybe a little under 45 minutes or so. So the idea here, the goal here is to do an exam breakdown on specific topics. Go ahead and comment if you're watching this live. And even when we post this live stream later, if you have topics that you would like me to go through and break down, we're happy to do that. Again, thank you all very much for attending and checking stuff out and all the great feedback, and for subscribing on the channel, and for making sure that you're passing exams and letting us know. We're excited to be serving you. So without further ado, let's get into it. And we'll get into the Fair Credit Reporting Act, the FCRA, and we'll sort of go from there. All right, so I'm kind of flying solo a little bit today, so bear with me. I just want to do a couple of checks and make sure everything is working well. I'm just going to look over my shoulder for a second. Looks like we are good to go. And let's get into some content. All right, let's do it. So the first things first, what I want to kind of show you is that the FCRA kind of is a federal law that sits under a certain dynamic. So let's kind of take a look at this. Let me just kind of draft this out really, really crude like. We have a bunch of federal laws. Now, this isn't a comprehensive list, but what's sort of going on here is we have a bunch of these different regulations. We have, Regulation B, for example, then we have Regulation C, then we have Regulation, let's say, P, then we have Regulation V, then we have Regulation X, and then we have Regulation Z. All right. So we have all of these different regulations and many more, right? Obviously, we know that there's several more here, things like Regulation N, and there's a bunch of other laws that don't sit under these. These are what are implementing or promulgating these laws. It's implemented under Regulation Z. So for example, Reg Z, last week we were talking about Truth in Lending Act, and I had mentioned that it's good to know that sometimes the Truth in Lending Act is also referred to as Regulation Z. So with Reg Z, there's TILA, all right, the Truth in Lending Act. And some of these other ones are fairly easy to understand, like Reg P, the letter P for privacy. The privacy law, the Graham-Leach-Bliley Act, for example, is Regulation P, or it's Graham-Leach-Bliley is sort of promulgated or distributed through Regulation P. Regulation X is RESPA, the Real Estate Settlement Procedures Act. And briefly last week, we talked about this sort of union between Reg X and Reg P with something called the TRID rule. TRID stands for the TILA, RESPA, Integrated Disclosure Rule, and we talked about the CD and the LE, right? So I want to focus here today, and we're going to be looking at Regulation V. And Regulation V deals with the Fair Credit Reporting Act. And underneath the Fair Credit Reporting Act, a amendment to the Fair Credit Reporting Act, the main law, was something called FACTA or FACT Act. I'm just going to write FACTA. And so this FACTA sits underneath this, the FCRA, and all of this is promulgated by the Regulation V. So Regulation V implements the Fair Credit Reporting Act. So we write this thing called the Fair Credit Reporting Act. We figure out what we want to cover inside of it as a society, and then the law makes it through its way through our various governmental systems. It gets approved, and then it gets implemented by Regulation V. Now, this is an easy way to remember. Fair Credit Reporting Act, credit, V for Visa, like a credit card company. So we got V for Visa. Reg V deals with Fair Credit Reporting Act. So the FCRA sits inside of Regulation V, V for Visa. So there's just a simple mnemonic device. It's always helpful. And as we're continuing to learn this stuff, I'll help you with these. They're very useful. No matter where you're studying this stuff, it's always kind of easier to understand it from different perspectives. And I think having that visual and understanding it is pretty important. So what's going to happen is we're going to explore this today. We're going to look at Regulation V and the Fair Credit Reporting Act and the FACT Act. So that's sort of where I hope to take you. And as we're learning this stuff, that's where we're going to jump right in. All right, so let's jump in. Let me get my notes ready to kind of talk about, and we'll go from there. Sorry about that. All right, so notes number one. Let's kind of take a look at this. We have some key discussion points here for the Fair Credit Reporting Act. We've got the Fair Credit Reporting Act, number one, is also known as the FCRA. As you're studying for this examination, I would recommend that you definitely want to make sure that you learn the initialisms and then learn the full thing. So Fair Credit Reporting Act, FCRA. Fair Credit Reporting Act was enacted in 1970. It's all right to know the reference point time-wise, but I wouldn't worry so much about that. It's always good to know. I've seen it illuminated in lots of different textbooks throughout the United States that teach this specific topic, so that might be just something you want to compartmentalize. Was the first federal law to regulate the collection, use, and dissemination of consumer credit information. Its primary purpose is to, number one, ensure accuracy, privacy, and fairness. How does it accomplish that? By requiring credit reporting agencies to ensure the accuracy and completeness of credit reports. It establishes procedures for consumers to dispute inaccurate or incomplete information. Number two, it promotes consumer rights. And this is one of the hallmarks of sort of the evolution of what the FCRA and all of these consumer protection laws have done, is really promoting consumer rights. It guarantees consumers access to their credit reports. So this one is something that I would take note of. Number two, it mandates notification when adverse actions. And what do they mean by this? This is a phrase that you absolutely want to know. An adverse action is where the lender or creditor makes a decision adverse to the consumer's intention. So in other words, simply put, it's a denial of credit. So understanding that the phrase adverse action equals denial of a credit in this particular discussion, that's sort of an important sort of distinction to make. And then these are taken based on the credit report. So, okay, so a lender could deny you credit, but because of the FCRA, now they have to explain to you why. And that was never the case prior to the passage of this law. A lender could just say, hey, I just don't want to loan you the money. Hey, it could be for any protected class reason for that. We'll talk about different anti-discrimination laws as them being relevant to this exam and other examinations. But that's kind of the way that it was sort of brought in. Now, so adverse action is important. And the next thing that we need to check out is consumer grants and the ability to correct errors on credit reports. So again, all of this sits under neatly into the world of protecting and promoting consumer rights. All right, chew on that for just a few minutes. I'm going to take a short break. I just need to double check something with tech and we will be good to go. Be back in a few minutes. Hey, sorry about that. We just wanted to make sure we weren't streaming to all of our channels, so I just had to fix something really quick. I appreciate you hanging with me. Some technical difficulties are always going to come up, and especially when you're doing all of this streaming, it becomes a little complicated sometimes when you miss like one button. It's literally one extra button, but we should be good to go. Welcome, welcome, welcome. We've been talking about the Fair Credit Reporting Act. Let's continue our exploration here. We've kind of started, just to kind of give you a quick repeat of what we were talking about really quickly, we found that the FCRA, the Fair Credit Reporting Act, is also known as Regulation V for Visa. It's the first federal law of its kind that regulates the collection, the use, and the dissemination of credit information. And its primary purposes are to ensure privacy and fairness, to promote consumer rights, and to establish oversight and accountability. So we regulate the responsibilities of the furnishers of credit information, requiring them to report accurate data. And then it sets penalties for non-compliance, including fines and legal actions. And so these are the items that the Fair Credit Reporting Act are kind of dealing with. And these are the things that I would focus on. Now, later in the 2000s, as information was sort of everywhere, we started to see this upsurge in identity theft and fraud. People stealing other people's identities. Credit information was there was no rules on how to destroy things. There was no rules and regulations on what to do. So all of this bad problem with identity theft started to come up. So in response to that, then they amended the Fair Credit Reporting Act to include this thing here called FACTA, the Fair and Accurate Credit Transactions Act. And FACTA, which was enacted in 2003, is an amendment to the FCRA, focusing on enhancing consumer rights and protections against identity theft. So if I were you studying for this examination, I would couple FACTA and identity theft. What's the prime directive of FACTA, the reasoning behind it? It's identity theft. That's the whole point. So let's look at some of the bullet points here. To enhance credit reporting accuracy, it requires credit reporting agencies, that's what CRA stands for, to maintain accurate data and promptly resolve disputes within 30 days. I would know 30 days. Many times test writers may be inclined to go after the days and things of that nature. Protect consumer privacy. Limits the sharing of sensitive information without the consumer's consent. And it reduces identity theft risks by masking social security numbers and providing opt-out options for pre-screened offers. So the whole truncation of social security numbers and credit card numbers came from the FACT Act and sort of what to do after the 2000s started and you started to see this identity theft come up. It clearly strengthened identity theft protections. It enabled fraud alerts. And as many consumers that are watching this know, that we can easily now turn our credit on and off and freeze things and have fraud alerts. If anybody is looking or inquiring or doing anything, now we can get the alerts. And it also has provisions for active duty alerts for identity theft victims and military personnel. It allows consumers to freeze their credit files to prevent unauthorized accounts from being opened, and it provides a free annual credit report to help consumers monitor their credit. So the credit report many times won't have the score, it might have the grade, but today more and more you're seeing the repositories offer scoring in addition to just the free credit report. So every consumer gets access to a free credit report once a year. It promotes transparency. It requires lenders to disclose credit scores and the factors influencing them. Obviously, if there's a denial, it needs to identify the score and the repository, Equifax, TransUnion, Experian, who gave that score and why. Okay? It mandates risk-based pricing notices when consumers receive less than favorable loan terms due to their credit reporting. So FACT Act is really, again, another consumer protection law that sits inside of the belly of this major Fair Credit Reporting Act. So the Fair Credit Reporting Act is the United States' response to credit, all things credit, and the FACT Act sort of lives inside of the belly of the FCRA. Okay? All right, so that's a little bit about that. Let's keep moving. Pop this open, go here, and let's go to the next bit. Number 5, another thing that FACT Act does, and this is important, and this is the stuff that I would also note, is that it ensures the secure handling of credit data. It enforces something called the disposal rule. So what federal law has the disposal rule? FACT Act, not FCRA. If I were writing a test question, maybe that's what I would write. I would write the Fair Credit Reporting Act and the Fair and Accurate Credit Transactions Act. Which one enforces the disposal rule? And that's the FACT Act. And the disposal rule is for businesses to securely dispose of sensitive consumer information. As a matter of fact, before the passage of FACTA, a bank, for example, would have piles of loan applications, social security numbers, bank account numbers, all of this sensitive information. They just throw it in the trash. They wouldn't even shred it. So shredding came about because of banks not being in compliance with FACT Act, because of the disposal rule specifically. And it implements these things called red flag rules, and these require businesses to establish an identity theft prevention program. And we're not just talking credit companies or lenders, we're also talking companies like Target and Walmart. When you swipe their information and you have all this private information where big companies will gather this stuff, they have to also be subject to the Fair and Accurate Credit Transactions Act and the red flag rules. Now, Regulation V implements both the FCRA, the Fair Credit Reporting Act, and FACT Act, and it governs the collection, the use, and sharing of consumer credit information to ensure accuracy and dispute resolution, requiring credit reporting agencies to investigate disputes promptly and correct errors. Privacy protections limits access to credit reports to authorized parties with permissible purposes. Consumer awareness supports consumer education on rights, such as accessing credit reports and disputing inaccuracies. And the enforcement provisions, it establishes penalties for noncompliance, ensuring businesses to adhere to the credit reporting laws. All right. So that's sort of this overview. All right. That's the overview of the Fair and Accurate Credit Transactions Act. And that's a little bit of an overview about the FACT Act. And you want to make sure that you understand that Regulation V and some of these provisions inside, sort of the red flag rules, the disposal rules, and so on, identity theft prevention programming. So again, remember, anything identity theft, FACT Act. Anything general credit, like adverse action notices, etc., that's going to be the Fair Credit Reporting Act. So anything dealing with credit reporting, pick Fair Credit Reporting Act. Anything dealing with identity theft, pick FACT Act. That's how you're going to roll here. Now, what I want to do in the next segment is I want to go through some vocab phrases. We're going to go through some of those flashcards, and I'll sort of point out what I think is important and relevant. And let's do that in a few minutes. Let's just take a short pause while I get the flashcards up and running. Let's say a few minutes, and then we'll get back to this stream, and we'll continue our exploration of the Fair Credit Reporting Act and the Fair and Accurate Credit Transactions Act, all of which is implemented by something called Reg Z. All right, we're back. Let's go through some flashcards now as we're talking about this Regulation V and the Fair Credit Reporting Act. And I'm going to just jump right in. Let's start talking about stuff. When I find it relevant to add a little bit more beyond the flashcards, I will. So let's jump into this right now. The first one is the Fair Credit Reporting Act, or the FCRA. The Fair Credit Reporting Act was enacted in 1970. The Fair Credit Reporting Act was one of the first federal laws to regulate the collection, dissemination, and use of consumer credit information to ensure accuracy, fairness, and privacy. Fair and Accurate Credit Transactions Act, or FACTA, or they sometimes call this one FACT Act, depending on where you're taking the exam or where you're learning it. So FACTA is a 2003 amendment, remember, to the FCRA, designed to enhance consumer rights by addressing issues like identity theft, that's the operative phrase right there, credit report accuracy, and consumer access to credit information. Regulation V. Reg V implements the Fair Credit Reporting Act and FACTA, governing the collection, the sharing, and the use of consumer credit information. Consumer Financial Protection Act, the CFPA. This was enacted as part of the Dodd-Frank Wall Street Reform Act. This law supports FACTA and the FCRA by granting authority to the CFPB, which stands for the Consumer Financial Protection Bureau, to enforce credit reporting and consumer protection laws. So, something to note for real estate exams, for the mortgage exams specifically, is Dodd-Frank. And the Dodd-Frank Wall Street Reform Act created one of the things, there was two big things. One, a big thing was like mortgage reform, mortgage industry reform, and which was like Section 14. And then Section 10 of the Dodd-Frank Wall Street Reform Act, the Consumer Financial Protection Act piece, was the creation of something called the CFPB, the Consumer Financial Protection Bureau. So what they did was they decided all of these different federal agencies were enforcing certain laws and other ones were enforcing other laws. And so there was a lot of overlap and a lot of sort of these problems with who was the enforcement arm, who was who did what when it came down to it. So what they did here was they said, you know what, this is all consumer protection, this is all financial consumer protection. Let's just make one agency, and that agency has the enforcement authority on the federal level to help come up with effective legislation and help to get it passed to enforce primarily this and to help the states with the enforcement actions and allow states to also have the ability. So they kind of codified everything under one. So who is the enforcer for the majority of all of this stuff? It's the CFPB, the Consumer Financial Protection Bureau. And again, the FCRA is no sort of stranger. The only one that's an outlier that you might want to take note of is HUD, the Department of Housing and Urban Development, still enforces fair housing violations. Other than that, everything else is CFPB. The Federal Trade Commission. The FTC is a federal agency responsible for protecting consumers and ensuring their fair competition in the marketplace. It's in consumer credit, the FTC enforces laws like the FCRA to ensure credit reporting accuracy, privacy, and dispute resolution rights. The CFPB, Consumer Financial Protection Bureau, is a federal agency created by the Dodd-Frank Act to protect consumers in the financial marketplace. It oversees financial products like mortgages, credit cards, and loans, ensuring transparency and fair practices while enforcing laws like TILA and the FCRA. Accuracy dispute process. Consumers have the right to dispute any information on their credit reports that they believe is inaccurate, incomplete, or outdated within a 30-day resolution requirement. And I would remember the 30-day resolution requirement when it comes down to accuracy and adverse actions. Free credit reports. Consumers are entitled to one free credit report annually from each of the three major bureaus, those being Equifax, Experian, or TransUnion. Fraud alerts. This is one I would definitely take note of. Tools that notify creditors to take extra steps to verify a consumer's identity before extending credit, reducing the risk of fraudulent activity. They are particularly useful for identifying for identity theft victims and can be placed on credit files for an initial 1-year period, with extended alerts available for confirmed identity theft cases. Active duty alerts. Military personnel on active duty can place an alert on their credit file to help reduce the risk of identity theft while they are being deployed. This alert notifies creditors to take extra steps to verify the service member's identity before extending credit. Identity theft report. Victims of identity theft can file a report with credit reporting agencies to formally document fraudulent activity and request that fraudulent transactions or accounts be blocked from their credit file. Opt-out rights. Consumers can opt out of receiving pre-screened credit and insurance offers, which are generated based on pre-qualification criteria found in their credit reports. By opting out, consumers can reduce unsolicited mail and protect their privacy. Clear and conspicuous disclosure. Important credit information must be presented in a manner that is easily readable and understandable, ensuring that consumers can make informed financial decisions. This requirement emphasizes transparency, preventing lenders and businesses from hiding key details in fine print or overly complex language. Credit score disclosure. Lenders are required to disclose a consumer's credit score when it is used in the lending decision process, along with key factors that influence the score. This transparency helps consumers understand their financial standing and identify areas where they can improve their credit worthiness. Risk-based pricing notice is a disclosure required by law to inform consumers when their credit report has led to less favorable loan terms, such as higher interest rates or stricter loan conditions. This notice ensures transparency by explaining that the terms offered are influenced by the consumer's credit profile, allowing the individual to review their credit report for accuracy and take steps to improve their credit standing if necessary. Adverse action notice. This is an important definition. If a credit application is denied based on the credit report, lenders must provide details about the denial and how to address issues with the credit bureau. Furnisher responsibilities. Companies such as lenders or creditors that provide information to credit reporting agencies are required to ensure that the data that they report is accurate and up to date. They must also promptly investigate and resolve disputes raised by consumers or the credit bureaus regarding incorrect or incomplete information. Disposal rules. Businesses that handle sensitive consumer credit information are required to securely dispose of this data when it is no longer needed to prevent unauthorized access or identity theft. Secure disposal methods such as shredding paper records or securely erasing electronic data are mandated to protect consumers' financial privacy and security. Red flag rules. They require businesses and financial institutions to establish, implement, and maintain a formal identity theft prevention program. This program must include policies and procedures designed to detect warning signs or red flags of identity theft. Penalty for non-compliance. Businesses and entities that violate the provisions of the FACTA or Regulation V face significant consequences, including fines imposed by regulatory agencies and potential legal action. And in some cases, consumers may also have the right to sue for damages if the non-compliance negatively affects them, ensuring accountability for violations of consumer protection laws. All right, so there was our list of good vocab phrases that you're going to want to know for this particular section. Let's take a short break here, and I just want to finish up our session with a few practice quiz questions. We'll see you in just a few moments. All right, we are back. Let's do these quiz questions, and then we can wrap our session. Get you guys back from your lunch breaks. Go back to work. Don't tell anybody that you're practicing for an exam. Don't tell anybody that you're thinking about moving jobs or whatever else you're doing, right? So the goal here with the exam breakdown is to get in there, do some studying while on the DL, while we're kind of like on a lunch break and on hump day of all days, so you can go, hey, I really want to change my careers. I really want to move on. I really want to go after something else, and you're sneaking your study session now. So eat some chow and listen to me talk about stuff. All right, so let's get into these questions really quickly. Question number 1. What is the main purpose of the Fair and Accurate Credit Transactions Act, or FACTA? Letter A, to set lending guidelines for banks. Letter B, to promote accurate and secure credit reporting. Letter C, to establish interest rate limits for loans. Letter D, to regulate identity theft insurance providers. What is the main purpose of the Fair and Accurate Credit Transactions Act? And the answer is letter B, to promote accurate and secure credit reporting. Remember, FACT Act is about accurate and secure credit reporting, and primarily remember the phrase identity theft, because that's going to be definitely something you're going to see on this examination. That's how I would approach it. FACT Act is identity theft. Question number 2. What must lenders do when denying a credit application based on a consumer's credit report? Letter A. Report the borrower to a collection agency. Letter B. Notify the borrower and refer them to a credit repair service. Letter C. Offer a free loan counseling session. Letter D. Disclose the reason for denial and provide information about the credit reporting agency. What must lenders do when denying a credit application based on a consumer's credit report? And the answer, letter D. Disclose the reason for the denial and provide information about the credit reporting agency. This is all, again, Fair Credit Reporting Act and what must happen if an adverse action has taken place. Question number 3. Which of the following is not a protection under FACTA? Letter A, the right to dispute credit report inaccuracies. Letter B, the ability to opt out of pre-screened credit offers. Letter C, a prohibition on dual tracking by lenders. Letter D, free annual access to credit reports. Which of the following is not a protection under FACTA? And the answer, letter C, the prohibition on dual tracking by lenders. So the other 3 were all sort of what FACTA is about, and then letter C was the outlier. Question number 4. Which of the following implements the FCRA and FACTA and governs the collection, sharing, and use of consumer credit information? Letter A, Regulation B. Letter B, Regulation X. Letter C, Regulation V. Letter D, Regulation Z. Which of the following implements the Fair Credit Reporting Act and the FACTA Act and governs the collection, sharing, and use of consumer credit information? And the answer, letter C, Regulation V, all day long. Remember, Regulation V, V for Visa, our 2 credit laws are implemented by Regulation V, Fair Credit Reporting Act, Fair and Accurate Credit Transactions Act. Question number 5. Which right allows consumers to stop pre-screened credit offers under FACTA? Letter A, opt-out rights. Letter B, fraud alerts. Letter C, risk-based pricing notice. Letter D, disposal rule. Which right allows consumers to stop pre-screened credit offers under the Fair and Accurate Credit Transactions Act? And the answer, letter A, simply opting out. So pre-screen offers, give me the opt-out right. If I can opt out, you're not going to be able to bother me. That's the logic here. Pretty intuitive, pretty easy, but a good question. And question number 6. What is the purpose of the red flag rules under the Fair and Accurate Credit Transactions Act? Letter A, to detect, prevent, and mitigate identity theft. Letter B, to disclose the methodology for calculating credit scores. Letter C, to require lenders to delete outdated information. Letter D, to limit credit reporting to certain agencies. What is the purpose of the red flag rule under FACTA? And the answer, letter A, to detect, prevent, and mitigate identity theft. FACTA is all about identity theft, and this is something you definitely want to know. Okay, so we covered Regulation V, Fair and Accurate Credit Transactions Act, Fair Credit Reporting Act, some of the provisions, some of the rules, how it works. We looked at some vocab phrases, and we finished up with some pretty decent questions to help get you primed for this section on your exam. You want to check the question concentrations on the outlines at the NMLS site. They're going to tell you how much, and I believe roughly 20-ish, maybe a little bit more percent are going to federal law. So it's a fairly large chunk of the examination that you definitely want to start to filter in. This is just one of those laws amongst a lot of different laws that we're going to be covering to get you primed for it. Okay, this exam breakdown will continue every Wednesday between 12 and 1 to get you primed and ready for that examination. If you're new to our channel, thank you very much for subscribing. If you're considering it, smash that subscribe and like button. Just let people know we're giving you lots of content that is going to help you get ready for this examination. I want to thank you and for my team and I regarding checking out our content and giving us all kinds of feedback. Let us know if there's something that you would like us to cover, and we're happy to do that if we can fit it into our schedule and to sort of coach. Somebody just requested some specific Arizona flashcards, for example, and we whipped it together and we're about to release it. So, again, we're happy to help. If there's anything we can do, our goal here on this particular channel and this particular segment is to help you get through these examinations and to help study with you as you're looking forward to getting this license and to make great things happen for you and your family. Good luck with your studies. Good luck on your exams. We'll see you at the next exam breakdown, which is next Wednesday from 12 to 1. Have a great week. Study hard, study well, and we'll see you in the next one. Thanks a lot for checking us out.